Anton.
Widgeon, happy Friday.
Happy Friday to you, my friend. Good to
Welcome,
see you, mate.
everyone. Good to see you.
Well, they're not here yet, but while people are arriving, when you arrive, let us know, folks. Give us a shout out in the chat. I dare say that one or two of you will be popping by momentarily. But, mate, I've busted out something decent tonight, I think. It's called Grains of Paradise. Charles Melton. A Shiraz from the Barossa. There you go.
Wow. Oh, mate, that'll
fancy.
knock your socks off, that one. Well, look at that. It's even red. It's
Fancy.
probably at the right temperature. Is it in a plastic glass?
It is in a plastic glass. I was in a bit of a hurry, so I didn't get you good glasses. But I knew you'd fucking ask that.
Unbelievable. You look a little bit windswept there, mates. What's been going on? Have you had a day out of the office? You're making me look very anemic. Yeah.
Well, yeah, I do. Donna dialed into the old Wealth Coffee Chat this morning. Donna, welcome to the Wine and Wisdom, top and tail today. But yeah, I went out for a quick hit of golf with a good buddy of ours, mate, John O'Reilly, and it was windy and sunny. I think I've even got a little bit of a glow going on from the sun, but it was awesome.
One would wonder whether there was a romance going on there, mate. You're glowing. You're glowing. That's what a good day on the golf course does.
Indeed. Yep. Well, Chris is in the house. Afternoon to you, mate. We've got Jeanette. Donna's on the line also. Yeah, grab yourself a glass of wine. I think that's the afternoon of choice.
Yeah, absolutely.
We've got where have we got Sharon? Sharon's all the way from Shep. Are you in Shepparton, Sharon?
Yeah. Either Shep or down Anglesey way.
Down Anglesey, yeah. And then we've got who we got here? Oh, we got a few in the house, which is good. Joel, how are you, mate?
Joel. G'day, mate.
Sanath, Alexis, Graham, and Gabrielle. No wine, but a beer will do. Well, yep, indeed. a beer will do, Kelly.
And Kelly. Well, it's a bit early for Kelly, mate. So Kelly, hopefully you're maybe onto a coffee there, maybe in WA.
Oh, there you go. Sharon's driving down to Anglesey. Well, mate, big show ahead. Big show ahead today.
Huge. Mate, you'd be drinking in the morning if you were watching the news these days, wouldn't you?
Well, it's the pace of mayhem is certainly winding up out there, and plenty going on. And today, folks, we're going to be diving into a few things. I've loaded up my bits and pieces tonight, Andy. So might have to do a version 2 of this. The first one and the second one, but you never know. I've been gathering a bit of information in the last week, but I know you and I have been chatting about what's been going on, folks. But while we get things lined up and ready, you guys know a bit of this Wealth, Wine and Wisdom. We do what's in the news. It's kind of the show. Andy and I have been chatting Fridays over a glass of wine, debriefing the week, trying to make some sense of our worlds, property, investing, and business, Andy, business, and the world of the share market and finance in general. And it's a bit of a confusing time, has been for a couple of years. We started it when the COVID landed, and it has continued. So great to see all of you guys dialed in for the weekly debrief. And it kind of goes roughly like this. What's in the news? Maybe there'll be some things you should know if we get to that, and some questions. So if you have questions, certainly give us a shout out in the chat, folks, and let us know if you got something that you think we should try and cover today as we go along. Have I missed anything, Andy? Kicking the show off?
No, but just whack the questions in nice and early, because if we get them in early, we'll try and cover them in the context of what we're going through right now. And no doubt many of you have got a lot of questions. Any of you still tune into mainstream media, have probably got a whole lot of questions ready to ask right about now, or maybe you're too scared to ask them. But that means they're the perfect ones to ask right about now, because the whole point of this is, I think these days, Jace, we started it to try and demystify all of the rules and regulations and the panic that was coming in with the not the GFC. Jeepers, going back a little bit in time, but
showing your age now, Andy. Showing your age.
when the pandemic started, but I think I show my age just by showing up, really. But we started it with dissecting what was going on in markets during the middle of the COVID pandemic. But ultimately, really now, what we're doing is trying to dissect the fear mongering that's going on the day-to-day basis, and try and cut through what you're hearing from the people that you shouldn't trust, and trying to bring some logic to the table. And rather than clickbait journalism, we're trying to get you to turn off the channel of the garbage that's probably going to make you want to slit your wrists, and start to get some perspectives on information that you can use practically in the world for you, your family, and your friends. So with that in mind.
Mate, why don't you kick it off? Because I know you've organised something here. So no, you're lining something up there. But Melinda's having a nice red while you're getting yourself ready, and Jared's on a beer. So good on you. Thanks for joining us, mate. We've got a couple of questions rolling in. But mate, what have you got? I know you and I were chatting a little bit off camera. Let's get into the show, and let's get fencing up there.
We'd reiterate. Wow, look at me. Look at the size of me, Jace. I'm massive. I've just blown up. I don't know what's going on, but I'm happy with it. So we introduced a little bit of a new section, Who Not to Trust. And the same culprits are on our list. I've got some stuff on rate hikes and stuff like that. But we had a little bit of pop at Christopher last week. I'm going to have a further pop at him, mate, so just to wrap this up, and classic, fear mongering headlines. If you read the rest of the article is actually not too bad. So I will say that. The challenge is that most journalists actually know, and most newspapers know, that most people don't even get past the first paragraph. Yeah. So what they do is they digest literally 30 or 40 seconds. And so this was the part that I really had some serious issue with. Some of the most aggressive interest rate hikes in the world. Jason. So last week we battle tested that with interest rates with the rest of the world, and we compared it with just 3 other places. One would call them majorly, insignificant places like the US, like Europe and the UK. And we found that statement was not just wrong, but absurdly wrong. And anyway, so I thought, let's not stand on ceremony, Jace. Let's dig a little bit further. So what I did is
Zoom into those, Andy. Oh yeah, there we go.
I did a little bit of a further investigation. So what we're looking at here, I'm not just going to have pops at journalists, but that's one of our favourite things to do around here is those people who put false news out there, which tend to be politicians and now journalists. 2 people not to trust. Also up there with economists. But so thought I'd just have a look and go, well, we looked at the major countries, Jace, but let's have a look at the whole world. Let's have a look at everybody in the world.
Yeah, well, maybe they were talking about just, somewhere else, not the US or the main ones. Yeah.
There's a big cross-section of people out there. So the most aggressive rate hikes in the world. So let's have a look at where Australia sits in comparison to the rest of the world with how aggressive we are with raising interest rates. And the reason why we're saying this is because we kind of want to bring some stability to the argument. When you see a sensationalist headline which says we're raising interest rates faster than the rest of the world, well, Jason, one thing that should be happening is if we were raising interest rates so bloody quickly, our dollar should be going through the roof. So why isn't it going through the roof? I'll get to that a little bit later on, because mostly the people who are making these wild accusations are full of shit, Jason. So let's have a look. So on the right-hand side here, and you can't quite see it, but it's just here that says change. So there's dates, because all of the different reserve banks of the world, or federal reserves, but basically the central banks of the world, they have different dates that they meet. And so I've tried to line these up as best as I possibly can. And these are the months, because it's the US form. So the months is first and the day is second. So tried to line these up as best as I possibly can. Some of them don't meet monthly. So this is the best possible example I can give, but it tells a pretty compelling story, Jace. So if we were to be in the most aggressive rate hikes in the world, well, let's have a look at the least aggressive. At the moment, we've got Switzerland leading the way as the least aggressive rate hikes in the world. So,
which means that they're dropping interest rates.
Yeah. Well, sorry, there are some. So all of the green are going in the opposite direction.
Yeah,
right?
going the opposite direction. Okay.
So
Yeah.
all
Okay.
of the red. So I'm not going to address the green right now because they're kind of a different proposal.
Different kettle of fish.
Different things going on over there. But everybody who is actually dropping rates. So we've got one of the lowest rate drops we've seen is actually the Swiss, right? So they're the most conservative of the bunch. One might even say European interest rates, ECB, flatlining at 0 is probably joining them, right? And then we've got, as we go through here, we've got Swedish, and the Swedes actually went through the whole pandemic pretty damn well. Like they fared pretty damn well throughout the whole pandemic. They had some interesting policies. Israel, which is known, Jason, as one of the most vaccinated places in the world, I'm not sure if it still is, but it was certainly.
There you go. Learn something every day, even at Wine and Wisdom. Hey?
Yeah, well, I'm not sure whether that's true, Jason. It was true. I'm not sure whether it still is true. It was true about probably about 6 months ago. So they're one of the slowest in raising. The Norwegians, love the Norwegians, fantastic. Got one of the highest taxes on alcohol in the Western world. But geez, they still know how to drink. I can tell you what, they make their own moonshine. You can increase the taxes on alcohol, but you can't stop the consumption, Jason. That's the story behind that.
If there's a will, there's a way.
if there's a distillery, there's a way. And look at this, Jace. Look at that. We're actually here. We're actually here. So we're actually.
Have we got some more to go yet, Andy? Like, I mean, that doesn't look like the highest in the world, by the way.
We're only just getting started, and I had to cull this graph in order to get some context in there. So let's start. Let's go to the opposite side of the equation.
Oh my lord! Right? Yeah. Okay, we're a long way away. Yeah.
Brazil raised interest rates from the 15th of the 6th by 13.25%. One might say that would be one of the most aggressive rate hikes in the world, Jason. And so maybe, and I could be wrong here, maybe what our mate Chris was trying to say was Brazil with some of the most aggressive rate hikes in the world.
It was a typo, Andy. It was a typo. It was a typo.
Been a typo, Jason. So we must get the fact checkers in there. We've got Russia in there. Interestingly enough, we've got Hungary, we've got Mexico, we've got Indonesia, we've got Poland. That's for obvious reasons. The Czech Republic. We've got India. We've got South Africa. We've got New Zealand. We spoke about New Zealand last week.
Yeah, New Zealand is certainly having some challenges in that space.
So we've got Saudi Arabia. We've got Bank of Korea. We've got Canada. Mate, there is a plethora, right? When it comes to, and I know I'm having a bit of fun here, but let's get real. I mean, we are pragmatically raising interest rates based on inflation. And if you have a look at us globally, Jace, we're actually in the bottom as far as interest rate rises are concerned. So,
so I think you were talking about, like, we're actually quite low when it comes to inflation in reality compared to a lot of other countries as well.
100%.
Yeah,
100%. Like, where everybody is suffering from inflationary worries at the moment and concerns, and as we said last week, some of this is going to be transitory, which is the effect of ports having to reopen. Like, when you stop an economy, when you stop the shipping channels, there's a whole logistical operation that's got to get back up to speed. The pumps have got to start working, the ships have got to start traveling, and that logistics doesn't just it can get stopped overnight. We never thought it could. but it almost did. But it doesn't remobilize overnight, right? That's not how it works. It takes time, and we've got the Russian influence with Ukraine, which is obviously inflated the challenges and made them significantly larger. But ultimately, um, when we have a look at the inflationary environment at the moment, we have got major things that are transitory, which means that they're here today, but they will likely be suppressed in the future. And we went into bond yields last week, which shows that there is actually downward pressure on the 5-year and the 10-year bond yields. And partly that is because the market is basically saying that it believes that some of these inflationary pressures are going to be relieved as the ports start to produce more, as the rest of the world starts to produce more of what is not being produced by Russia right now. And I guess the last thing that I'll say to this is, in the world, there's not necessarily one place, and we saw this with oil coming into COVID times. And I think we did a Wine and Wisdom about it, where there was shale oil, there was the Arabs, and there was a lot of political tension between the US and Arab oil. And ultimately, what happened was they shut off the tanks and they said, "Deal with this." Now, what happened is a very aggressive spike in prices very, very quickly. But then the 3-month, what ended up happening is they switched their operations on. They got more of the resources that were sitting dormant in America and the rest of the world, started churning the engines. And then, 3-4 months later, it normalized again and we all forgot about it. And so it's not that energy only comes from Russia and food only comes from Russia, but the world becomes reliant on that being a source.
And it takes time to change from one to another. Yep.
It does.
Yep.
And that, these are the things that we need to understand, that it's not the end of the world, but it does have an effect. And how we think about this, how we conceptualize it, and how we look into the future with these things needs to be done with consideration of, will that economy be allowed to distribute back? And what will the world then start to actually distribute that will bridge that gap?
What it looks like. Well, I think Donna said it very nicely here, mate. I think it comes with age in the game, some years in the game, taking a bit of experience, not worried about, the short-term things more than you should be worried, like, okay, well, if you've got a mortgage and the cost is going to go up, you need to make sure you can afford that and, tighten the belt a little bit, or make sure you've got your buffers set aside, or whatever that looks like, Andy. Like, quickly, just reference for everyone listening in, you're talking about, 5-year and 10-year and 30-year bond values and things like this. Just connect the dots for those listening in. What does that mean to us for interest rates? Because, basically it says, all right, well, if the market's forecasting that, this, then there's kind of an extrapolation of, all right, there's a margin on top of a cash rate or a bond rate or whatever it means, and means kind of the interest rates would probably be around this. Talk about that.
So when we
it's gin it's wealth, gin and wisdom here. So hello, that could be a Marie right there.
I reckon that's Marie just jumping in there. The gin, wine and wisdom with no wealth associated.
Hello, Alison.
Alison, good to have you in. So it's funny, isn't it, Jace? Because what we pay attention to quite often determines, the quality of our happiness in life, and then how we perceive how things are moving forward. And mostly when it comes to interest rates and when it comes to, financially, most people actually look at this, right? And I'm just going to flash it up for a tick, but the Reserve Bank cash rate, right? So, and we spoke about this last week, but the Reserve Bank cash rate is the only, right? Well, not the only, but basically in the terms of what we view in financial markets terms and what gets publicized. How often do you hear about the 10-year? Let me ask a different question. How often do you hear about the 5-year or the 10-year government bond rate on the news?
Well, I don't hear it at all, actually. I've never well, to be
I'm pretty
honest.
sure that none of them actually know what the hell it is, but they're pretty they're pretty good at commentating on the cash rate. And then I bet
Yeah.
you if you actually said there, Mr. Channel 9 news presenter or Mrs. Channel 9 news presenter, so how does that relate to the 10-year bond yield? They go, time for a commercial? Is it?
Yeah.
Yeah. We'll throw to a commercial on interest rates.
What are you talking about again? Chris is saying, never heard it. Never heard it. Yeah.
So they focus on the one rate that is actually dictated in the market, right? We spoke about this last week, and I think that it's good to go back over it.
Yeah, when
But
you're saying
the
a
cash
person decides it, right? Not the market. Yeah.
person decides.
Yes.
Yeah,
Yes.
or a group of people. The Reserve
Yeah.
Bank sets the interest rate. They determine. They go, we're going to raise the cash rate by 0.5%, and likely the next one will be 0.5%. Why do I say likely? Rate hikes today, we had 1%, 0.5%, 0.7% in some of the major areas around the world. I'll get to that a little bit later. So, but the thing is that we live, breathe, and get fearful over the cash rate, and ultimately that's what the government sets. But the rest of these things, like the 3-year government bond rate, which we've got here, the 10-year government or the 5-year and the 10-year government bond rate, right? These are all market set, right? So this is set by institutions.
What does that mean, though, Andy? Yeah. Like, what does market set mean?
So this is where everybody plays in this market, right? So it's a market
Move
where
yourself over that way a bit. Move your pip.
over here.
Yeah, there you go. Look at you
There
go.
you go.
Yeah.
Look at me. I'm pretty quick. I can be anywhere. Ba-boom, ba-boom.
Fenton, where is he?
So ultimately, when this is what we call a market decides the rate, Jason. And so let's call it the general consensus of everybody who is trading in the market.
Yeah.
Right. If they believe that they're paying too much, they won't bid on it, which means that it'll put downward pressure on the bidding price, just the same as real estate, right?
Yes.
Somebody doesn't just come in and say this property is worth $2 million. There is a group of people quite often, and in a good market, there's lots of them which will converge on an auction, and they will set what they believe a fair price for that is over that period. And more emotion gets involved in that, to be fair. In the business world, the bond rate is a bit more pragmatic than that.
Yes.
But ultimately, the same concept is true. There is a market of people that come together and they go, well, how much, if we're going to lend money out into the market, how much are we going to pay, in order, or if we're going to borrow money from the market, how much are we going to pay? And the person who's lending the money is going to sit there and go, well, how risky are you? And ultimately, the more money that you're trying to borrow, the more risky you are. The greater economic instability that exists in the country, the greater risk you are. And so the market then determines what the long-term interest rate should be on a 10-year government bond, right? And so this is what I mean by market determined, is in the actual market determines what is the fair rate. And so the market looks at inflationary data. The market looks a long term into the future, right? Because when you make a business decision, Jason, your business, do you make it for the next week?
No, yeah. I mean, I'm making decisions for 10 years. I've got a 10-year goal in my business right now.
And that's how we plan in business, isn't it? We have to make decisions every day, but we don't make decisions that are for the end of the week or the end of the month or the end of the year. We have to manage the process of what goes on over that period of time, the same way people have to manage their finances. You're making decisions on maybe a quarterly basis, and you have to strategically shift at times. But ultimately, you're looking at a 10, 15, 20-year time horizon that you should be investing, and that's how we do in business. And globally, when businesses are looking at borrowing, minimum value on these bonds, $100,000, they're looking at a lot of data, and it gets set by the market based on what the market believes is happening.
And the market pool is like quite large. It's not like two people. It could be, and it could be many millions of eyeballs and data points.
And we're talking of hundreds of billions of dollars worth of cash flow, trillions of dollars worth of cash flow in bond markets.
So now link that to the everyday person, Andy, to an interest rate I'm paying on my mortgage. do the full circle for us here. Like connect the dot. Connect the dot, not collect the dot.
Let's not collect. Yeah, connect the real dots, and let's not create unicorns. So ultimately, like when you have a look at, so if we have a look at the 10-year, basically what it's saying, right, is that the market is saying that right now, if they are going to buy a 10-year government bond, they're going to want to pay about 3.5%. They're going to want a yield if they're going to buy one. They're going to
Yep.
want an investment return. Think of it as like a really long-term deposit, right? If you want a 10-year term deposit, then you're going to want 3.5% because that's what the market is determining a fair interest risk,
Yep.
right, for the next 10 years. But the thing to note here is that it's been gradually going up. And what the journalists and what a lot of the market commentary, which is clickbait, will have you believe is that this is going to be a hockey stick curve, which means it's just going to keep going up. But you can see, and I might see if I can just delete some of this here, but you can actually see that the rates are starting to come down. Right, you can see how they've shot up above 4%, and they've aggressively come down. Now, one would argue that the reason why this has come down is because certain commodity prices, certain food prices have actually stabilized as markets have started to turn around. And what that means is that the market is now looking at that and going, well, perhaps oil's not going to stay at $7 billion a barrel, and perhaps, wheat is going to normalize a little bit. Yes, Russia's still a problem, but the world is an ecosystem and it tends to find a way.
It'll
And
find
so
a way. It'll stop getting it from there. It'll get it from somewhere else. I don't know. Whoever grows wheat is going to now get new contracts, and that'll take 12 months to kick in, and then it's good. Yeah,
and short term, it creates horrific disturbances in the market.
yes.
We saw oil going over to Europe at one point in time, and it was almost 100 times. Sorry, it was 10 times. It was 10 times the cost of the month before. 10 times for a ship of oil. 10 times, literally, for about a month. Like there was a massive spike. I might see if I can find it later on, but it normalized very quickly. And there was a massive amount of demand. There was no supply, so people would pay ridiculous prices for it. Now, the world will start to normalize on some of these more scarce commodity items, which means that all other things being equal, it should put downward pressure, right? Downward pressure on some of these inflationary markers, which means that inflation, yes, we might be looking at 9% inflation right now, but is it likely that we're looking at 16% inflation in 6 months' time? No. Like the market is not dictating that. The market is saying that we expect the next 6 to 12 months to be, reasonably turbulent as far as inflation is concerned, but they believe that longer term inflation will actually start to normalize. And the reason why we predict that is because the 10-year bond yields are actually coming down rather than going up. Because if they believe
and linking those 10-year bond yields, Andy, to investors who buy and sell money, right? So then these bond yields then often are used for institutions, e.g. banks and lending institutions, to then use folks as security, whatever it is, for lending other people money. So if you bought money, tell us in the chat right now. If you bought money at, let's say, what is it? What are we calling it, Andy? 3.5%. You bought money and your cost for 10 years is 3.5%, folks. All right. What would you sell? What if you owned money at 3.5%? If you owned $100 million at 3.5%, what would you want to sell it for, percentage-wise, over the next 10 years? Tell us right now in the chat. Like, because this is the game, right, Andy? Like, so the bonds are kind of like a version of, hey, people are buying and selling money at a certain number. Governments do it. Banks do it. Large, like a lot of big institutions and things do it. You can buy it at 3.5%. What would you sell it at, folks? Put that in the chat for me. What margin would you want to make? Or more importantly, what do you reckon you could make on it? And Chris is saying, all right, 5.5 to 6%. And that's probably about right. price is going, all right, well, I'll sell it at 3.85. And this is really interesting. This is what happens in the market, right, Andy? Like, so if you
100%.
buy it, then you've got people buying it at the same price, but their cost and want to sell it at a different price happens. And this is how you get pricing and interest rates in the marketplace. It's kind of
And
like
if people
connecting those
believe
dots.
that there is a lot more risk, they're going to want a lot more of an. They're going to want a
Yes.
higher interest rate in order to invest their money.
Right. So
And
Bryce is going to lend it to people who want a 70% loan on their own home and they're putting 30% cash in. But Chris is saying, hey, listen, I'm happy to lend it 5.5%, but the people who I'm going to lend that to might be high risk, 95% lending per se for a real estate investor, and I needed a mortgage insurance on the top of that to double my protection. And that's how I can sell that money at 6%, where Bryce is going, well, hang on, I'm not going to take that risk at 95%. So it's it's actually, and Chris is going on to chuck some LMI on that one. Well, LMI is the big rort. I think lenders' mortgage insurance is the big bloody scam in the world of finance. But anyway, don't get me started on that one.
But effectively, what we're looking at is the difference between what rates are right now,
Yes.
where they're expected to be in 5 years. And so you can make some pretty simple calculations based if you look at the long-term market. But this doesn't create headlines, because if they said we expect that over the next 5 years, there might be a bit of noise in the market, but we expect over the next 5 years that the cash rate's going to be at 3%. Do you think that that's going to create headlines?
Well, no, it won't. It won't sell headlines at all. It certainly won't be the most aggressive hikes in the world.
Absolutely not. Oh God, look, the beauty about the bond market at the moment, and this is a massive can of worms, because it seems you think that it's easy, but it's actually not. Bonds are quite complicated, but they're a love of mine. But you can go now, because the problem over the last 2-3 years is you couldn't get cash. Like cash, as you said, Jace, was trash. You couldn't get cash at a decent interest rate. Now you can get really good interest rates on cash around the world in different places. You can get a 4 or 5% cash return, right, for taking reasonable risks with that money. So that's the benefit of interest rates actually going up, which is kind of ironic because, one of the headlines could read, interest rates go up and finally pensioners can actually get a reasonable return on their money without taking as much risk.
Yeah.
It's actually a very true statement. Like now in the advice world, we're starting to look back at bonds and we're going, well, look, we can invest in some of this. We can put 20% in the portfolio at 3.5% over the next 5 years. And if we're getting that, that's not too bad. We'll take a bit of risk in other areas. So there's really good benefit for this in other areas, and also within business, right? Because ultimately in business, you needed to spend the cash pretty quickly, right? You wanted to spend the cash pretty quickly because if you're earning 0.1% on your cash, well, and inflation's running at 2 or 3% as it was. Well, your money's going backwards by 2.5% per annum just by sitting it there. So you're forced to mobilize it, which creates inflationary pressure, which puts upward pressure on interest rates. And now we're in a very typical cycle of where we were. And in my belief, markets operate quite efficiently with a 3 to 5% cash rate.
Yeah.
Right? In and around there is quite efficient for markets. It's not too much for investing. It's not too much for business. But it tends to overshoot either which way. But if you were to start leading with it, is it going? There must be a lot of relief around the pensioners because all of a sudden now we can actually get a reasonable return on our money, and we don't have to.
Well, I was going to ask about that, Andy. So you say, all right, okay, cash is up. However, for the moment, inflation's up too. So, what's going on there? Like, talk to that, because all right, well, cash returns up. Okay, I can buy a bond and I can get 3.5% for my cash, which 2 years ago was 0.5%, which was rubbish. But then I'm like, oh well, Andy, isn't inflation 7%, and isn't it still cash is trash? But you and I were chatting. It's not inflation's not everywhere, right? So, you know, what does that look like?
I mean, this is a big question, right? But and because it comes down to how much of it's transitory inflation and how much of
Yeah.
it is actually is here to stay. And there's parts of it that are kind of here to stay. Let's ask this to everybody out there, and I'll come back around. How do I phrase the question? Where do you think the greatest sources of inflation, meaning price increase, that are hitting your pocket, all right, your pocket,
Yeah.
outside of interest rates, what is hitting your pocket harder than anything else? What sectors? You know, is it
What
you know,
product or what sector is costing you the most?
yeah, is
Yeah.
it milk? Is it food? Is it petrol? Is it energy? Is it building? What are the areas that are hurting you most right now? Whack it into the chat. I'd be really interested to know what they are.
Well,
And
while we're waiting on that, we've got a few. I've done a quick survey. We've got Joel on the margaritas.
Arriba!
We've got Marie on the gin. We've got Melinda on the Reds with us. Good work, Melinda. And I think we had a few people on the beers. No one on the white. Anyone on the white this afternoon? Give us a shout out as we roll along. But I thought I saw someone on the beers there before. But anyway,
we did. I think it was Dan Andrews, wasn't it?
there we go. Jared's on the beer. All right, there we
on
go.
the
We got a
beer.
good cross section.
It wasn't Dan. It was
Oh,
Jared.
and someone else on the Shiraz here joining me on the Shiraz. Well, we've got a few answers in. So we've got here. We got a fair few actually. We've got fuel and energy from Julie. We've got electricity and fuel from Alison. Fuel from Chris. It's like too much driving. Yeah, bloody hell, diesel costing a lot. Groceries, insurance. There we go.
No, that's
Energy
an
from
one.
Bryce. Yep, a Deb insurance. Yeah, actually, some of our insurances for body corporates and stratas have been ludicrous.
Wow.
Donna, building and renovations. Joe, diesel, fuel from Deb. Yeah, so there you go. Or someone's on the rosé. We've got rosé going on. Alison's on the protein shake. Good work. And we've got someone on the white. There you go. What's a Euro white anyway? I think we're getting distracted here.
A Euro white. That almost sounds like a topic that we're not allowed to touch. It's not cash is trash in there anywhere, is there?
There you go.
So it's really interesting because some of these we would venture to say a transitory inflation, right? Because, and again, transitory meaning for whatever reason, supply chains have stopped that from being able to get here, but those supply chains will normalize, right? And so fuel is a classic example, right? Some of the major pipelines being closed down because what happens is Russia was actually quite instrumental for a lot of energy getting through to Europe. Right. And
so
a
when
lot
you're
of
talking energy, we're talking fuel, like we're talking oil, Andy. Like, is that so? We're talking, kind of it encompasses.
And I'm gonna kind of twist a few knobs here, because when we that didn't sound good, did it?
I shouldn't be drinking.
So I can't compose myself, Jason.
Right.
So
Russia and oil.
There are two different types of when we talk about energy. There's a couple of major factors that come into play in this. In Australia, some of the reason for higher energy costs is a degree of fixing by state and federal government.
Yeah.
Right.
Yeah.
Now, and this is not transitory. Right. When governments get involved in sectors, and for the last 4 or 5 years, some of the major components of inflation have been fixed cost based on government setting rates, right? Government setting rates, which and up until just recently, the key cause of inflation in the system had nothing to do with in Australia, had nothing to do with commercial free markets. And what I mean by markets determine their own reality. It was actually what we call fixed cost inflation, and fixed cost inflation is basically government dictated pricing. That's another way of saying it. Right. So the Queensland government, is that thieves, or maybe a variation of that? Anonymous user.
Well, we might talk about that in a minute. They're having a crack at land tax, but anyway, like it's fixed pricing, and also it's almost like I heard this term, and I'm going to sort of hack it, but it's like zombie pricing, Andy. Like governments forcing, let's say, tax regime onto the market. The market's like, hang on, the free market would never shit. It's forced on the market, and that's yeah.
So what we have is we've got some forced market inflation, which comes from the government subsidy, and then we've got some potentially transitory stuff, which is especially in fuel, oil at the moment. And I'll bring a graph in next week about fuel, because literally the supply chains and fuel transports around the world is quite amazing. The only thing that I think is more amazing than the way that fuel gets transported around the world is how fucking water gets transported around the world. Like, how you, Jason, end up with a bottle of Italian water just blows my mind, because the amount of fuel that it takes to get it from there to here, it's out of control. But fuel gets transported around the world, and when that supply chain gets disrupted, fuel prices can go through the roof, and we saw them absolutely go astronomical. Now, when we're talking about this, we're talking about gas, and we're talking about crude oil.
Yeah.
Right. And so when those supply chains shut down based on COVID, ports stopping, then that slowdown has created a mass disruption. Right now, we're feeling the effects, and it's always lagged. And the reason why it's lagged is because most companies have things called forward rate contracts, which basically means that today I fixed my costs for what I'm buying.
They usually fix them like 12, 18 months, 6 months, 12, 18 months. Yeah.
Correct. Right. Because they've got to know that they can keep all of their talent employed over the next year. So they need to know that if they're going to buy oil in 12 months' time, that it's got to be at this rate. Right. Because that's the rate that they're going to budget the next 12 months worth of expenses on. Very key to the markets.
Key to the markets.
So those of you who want to learn, let us know if you want to learn about futures markets and forward rate agreements. If you'd like to learn, whack it in the chat, and I'll give you an incredible resource where you can start to watch it. It's extraordinarily entertaining. You might remember the movie, Jason. I think it was called Trading Places with Eddie Murphy and Dan Aykroyd.
Mortimer, we're back. We're back.
We're back. It's a great movie that talks to you about, yes, Alison wants to know, Bryce wants to know, Trading Places, Eddie Murphy, Dan Aykroyd. It was about pork belly and orange
pork
juice
belly futures, mate. That's right. Exactly. No, I love it.
So, but it's a great movie that sort of teaches you about these things. But so what ends up happening with this transitory inflation is that when oil prices go up, it doesn't hit the market straight away, because the companies have already got locked in prices, right? So this what is called the spot price, and the spot price is what we can buy it for today.
Yes.
Right. Doesn't necessarily mean that's what you're going to pay for at the Bowser. Right. When you fill your car up, that will actually transfer into several months to 12 months down into the future. So that effect, and businesses get smart in between there and there, right? They can control and manipulate a little bit of that over time and try and decrease the costs. Government, they generally don't decrease their slice of the pie, but the Liberals did pre-election, right? But ultimately, what ends up happening, spot price of the cost of oil comes down, so the cost of oil goes up, 6 to 12 months later, we feel it at the pump. Cost of oil comes down, 6 to 12 months later, we feel it at the pump.
Yeah.
Right. And that's what we're seeing right now, is where like oil prices are still quite high. They spiked extraordinarily high. They then normalized and starting to trend in a sort of a downward trajectory. Wheat prices starting to do the same thing. They've come off. Everyone thought that they were going to shoot for the moon, but they've come off. They've stabilized, right, in the market at the moment. And what this means is then when we bring it back to interest rates, the market's going, okay, well, oil prices aren't going to the moon. Food prices aren't going to the moon. So therefore, inflation's not going to continue to keep going up and skyrocketing out of control for the next 5 to 10 years. And as a result, we're not going to pay 20% for a 10-year government bond. That's way too much. We believe that short term, there's going to be significant amount of turbulence, but longer term, it'll actually sort itself out. That's how this longer term relationship with money actually works. And those people who are looking at, investments in stocks, which are priced daily, investments in houses, which are priced.
They're trying to price them they're trying to price them like monthly now, which is ludicrous, but yeah.
We need to realistically, and this is where it used to be 5 or 10 years ago. And I actually love a song, Wear Sunscreen, that a mate of ours, Kerwin, plays, and actually did his own rendition of, which wasn't too bad.
Tag us on that one.
And it talks about how, back in it was always when you look back at the world as you grow old, you always think that when my dad was younger, politicians were more honest. And you have this belief that things were a little bit more utopian back in the day. But what we have now is we've got sensationalist type of news presenters, where back in the day, people actually reported a little bit more on the facts. That's my belief. I think that nowadays people are trying to grab attention, so they put clickbait headlines out there. And what we need to do in this forum, and what we need to do as investors, is actually start to re-educate ourselves on the stuff that's been around for a very, very, very long time. And Jace, you and I have a saying. It's not ours, but we say that history doesn't repeat itself.
Yep.
But it's an incredible mimic. And ultimately, what we need to do is kind of go, we have been in some way, shape, or form here before. And post World War II is a really good example of remobilization of trade. So there's lots of parts of what we're going through that we've been through before.
And ultimately, Andy, when you look through some of the, let's call it the logistics of these conversations, the foundation of all of it is based on humans, people, emotions, and we're like, nah. Like, for the moment, maybe I'm a bit uncertain, but you know what? I'm not going to sit around moping forever. No, fuck it, I'll get back to it, right? Like, so, sometimes there's a shock, and it's like, all right, is it the emotional shock of the marketplace is just going, whoa, what does this look like? Like, pause, or is it fundamental, structural? Do you know what I mean? And 90% of it is emotional, pause, kind of human behavior.
Well, my belief on where most people, unless you're a business owner, and this journey happens a little bit differently, but most people have never, ever had as much wealth as they have the day after tomorrow, and then the day after tomorrow, and then the day after tomorrow, right? And so most people end up going through life with more and more and more and more and more to lose, and a lot of effort that's been spent in the past that is attached to the accumulation of that wealth. The reason why I say business owners can sometimes be a little bit different is sometimes we can make it, lose it, make it, lose it, make it, lose it, and we get used to a fairly volatile journey.
We go up and down. Well, look at that, Andy. Right now in the Australian marketplace, Australian wealth has never been higher. $14 trillion, like $1 trillion, as
well, this is the thing, because the headlines say that God, I wish I had the slide actually, but the headlines say that we've never been in more debt than we have ever,
which is actual rubbish.
But it's true, because there's more money in circulation than there ever has been by a factor, depending on which point in time. I mean, they just printed $1 trillion and put it into the system, but it's relative. It's how much wealth. Debt is only a relative measure.
It's relative on percentage too, Andy. It's really interesting. And I don't know if I've got it right now because I won't be able to pull it up, but the relative debt. So the the percentages, so dollar terms, yes, but are Australians owning less of their real estate in my neck of the woods? And the answer is no. So the census came out just recently, 2021, and I'm just trying to grab something here for us all, but um, uh, the ownership, like the debt free ownership of real estate, has not changed as a percentage um, much at all from last time we did the censorship to this time when it comes to debt and owning real estate. I can't find it just quickly off the top of my head, but I'll do that next time because I've got a bit of that data that'd be quite cool to sort of share with everyone. But it's interesting.
And I reckon maybe we should get old Kerwin onto the show at some point in time and chat about the psychology side of it. Because,
Yeah.
mate, as a buyer, I love emotion.
Well, you can trade the emotion, Andy, can't you? In the marketplace, it's like, all right, well, we know that's a short-term emotional decision, not a long-term emotional decision. We can take advantage of that every day of the week.
When people are excited and going bananas, it's generally where I'll sort of sit back for a little bit and kind of go, okay, all right, well, maybe we'll just take a little bit of the cream and when people are scared witless, it's an incredible opportunity because people do extraordinarily stupid things
Yeah,
when they're
unfortunately.
in the grips of fear. And maybe we'll get, the big fella on at some point to chat about it because that'd be a great link into markets to actually look about the physiology, the chemistry that goes behind poor decision making.
Yeah.
Because let's face it, in financial markets terms, if we wind back to the bond market, if interest rates go up, markets will come down. That's a reality, right? You will lose if you sell out, right? Predicting when that falls is almost impossible. And if any investment guru or any advisor tells you that they, in my world, that they can pick the bottom of the market, run as far away from them
full
as
of
you
shit.
can possibly get.
Yeah, right. The other way for me is like if anyone can tell you, oh yeah, I've worked out how to predict capital growth in real estate, and like, nah, they're full of shit. They don't know what they're talking about. Like it's bullshit. It's there's plenty of things you can do, Andy, like to either, hey, what's my style? What's my indicators to buy at a certain time, or what's my strategy? What's my tactics? But if anyone says they know how to do it, they're full of shit because they don't control the market. They don't know the future.
I think it was Buffett who said the market has the market can stay irrational longer than you can stay solvent.
That is very true. That is very true.
And
hey, mate, we've got a few questions here. I thought would be worth maybe having a bit of a look at. One from Anne earlier on tonight. I hope you're still here, Anne. Talking about the land tax grab in Queensland. Here's some headline facts on that one, Anne. Andy,
this is insane.
It's
how are they going to actually how are they going to regulate this across states?
I've been asking this, right? So folks, if you don't know, Queensland has decided that on June 30, 2023, they're going to change the way land tax is calculated in Australia. So if you buy a property in Queensland and it's an investment property. Yep, thieves, absolutely rubbish. Which I completely agree with. If you buy an investment property in Queensland, they're going to say, hey, Andy, where else in Australia do you own real estate? So, number one, the Queensland government asking you to disclose information cross state lines. I don't even know how legal that is. We're
not even allowed to cross the state lines when they tell us we're not allowed to.
Hey,
hang on, don't come into Queensland.
Bullshit.
You're a Victorian.
Well, don't come in here or don't leave, like one of the two, right? So now they're saying, hang on, we want to know. We want to know your property somewhere else
in the states that you're not allowed to come from. It's like if my Victorian buddies, they're not allowed to come across here. So listen, what I own in Victoria is none of your goddamn business.
Yeah, right. So what they want to do is say, hey, listen, if you own property everywhere else, we know you cheeky investors are trying to hack the system and benefit from the tax-free threshold in Queensland. So we're gonna that's bullshit. If you own something somewhere else, you not only Andy, you not only miss out on the tax-free threshold,
Oh,
which I'm like, okay, if you want to do that, fine. But what they're going to do, folks, here's the thing, which I don't know how they're going to say, no, not only do you don't qualify for the threshold, but now we're going to take your Victorian property and bundle it in the land tax calculation for Queensland. Yeah, that's what.
maybe they're just trying to get rid of people from Queensland because, Jason, if
Well,
I just move across the border just south of Tweed Heads or into the New South Wales side of Tweed,
mate.
then all of a sudden it changes, doesn't it?
It's ludicrous. What? It's ludicrous. Anyway, I think the question is, Andy, how the hell are they going to manage this? Like, they haven't thought this shit through. They
Oh,
haven't
mate,
thought this stuff through. How are you
this
going to manage
this
it?
this this to me is punch drunk politicians who have had and premiers who have got a ridiculous amount of power and real this is irrational exuberance, I reckon, at its best.
Well,
Now
I
I'm no
mean,
legal expert on this stuff, but I know a reasonable amount of it. But ultimately, so let's and maybe you're better to do this. Let's frame this up a little bit stronger and go, well, what is land tax and how is it decided?
thievery. Thievery is land tax.
Well,
No.
thievery is land tax. Well, I mean, when you watch some of those old movies about King Henry and they used to go around and shoot people and chop their heads off if they weren't paying their land tax.
Mate. Well,
Um,
you know, it
but
it it
it's state based. It is not a
it's a
national
yeah,
tax.
yeah. It's
It's
not a national tax. Like that's yep. Chris, I think's got it right. It's bull shit. You're dead right, mate. And you know, it's and all so Andy, I've seen this at least once before in my property investing career.
it's
New
insane.
South Wales had this amazing idea. So Andy, when I don't know if you've seen these ones. So anyway, so
I just leave any conversation that sounds New South Wales had an amazing idea. It's like,
well,
wow,
the
where's this going
politicians
to
were
go?
like, hey, uh, capital gains tax, when it's paid, Andy, goes to the national government. Like it doesn't go to the state government. So the states, New South Wales, people were gaining value in their real estate, and New South Wales is like, we're missing out. We're not getting any of this action. So what they decided to do, the state decided to incorporate and bring in a exit tax at state level. So there was um, there was stamp duty and there was an exit tax. So there was an in tax and an out tax at state level, and then you had to pay capital gains tax at national level, which was bullshit, right? Anyway, it poleaxed that state for 5 years.
Well,
Like it
because
really,
what's the flow and effect? And so
uh,
let's simplify it.
well,
Let's
it's
go back
pretty.
to our old Norwegians who have one of the lowest rates of interest rate hikes in the world. What happened when they raised? Because in Norway, I think it's somewhere around 50%. Like you go and buy a bottle of Absolute in Norway, it's going to cost you $150, right?
Jesus.
It cost you about 30 or something in Australia. $150. That's expensive. So, do you think that and put it in the chat, do you think that raising taxes on alcohol in Norway stopped the Norwegians from drinking?
Queensland's got cut.
They have, they're punched. Joe, I reckon they're reading too much of their own BS. And this is really interesting because I'm not even sure how it complies with the ability, because it's got to relate with other states. Right? Because what
Well,
happens if you move from Queensland to Victoria and you've still got the same investment portfolio? Then what? Does Victoria get
and
to counter claim back?
well, I mean, that's the thing, right? And it's like, all right, well, Queensland's like, Bob's like, you know what? I don't have to invest in Queensland. I can invest in, South Australia, Adelaide. Like, I don't have to invest up there. You tossers. So not only will Bob not now invest up there and they won't get the stamp duty and the annual rates, now they won't get the land tax at all. Bob's out. And then we won't get
Bob's now
supply
renting his
because
own place in Queensland, and subletting is one that is his principal place of residence that he's not really living in Victoria, paying less land tax as a result of it. And mate, you can just see it.
Alison reckons she's just going to make some moonshine.
Moonshine. Well, that's what happened in Norway. All of a sudden the revenue dropped astronomically, and suicide rates went up. That's
uh,
actually fact.
uh,
But
well,
this is
thankfully, Andy, folks listening in, there are some ways to manage this. Andy, you and I have partners. Your partner can buy in Queensland and not own anywhere else in the country, and it won't be a problem. Or, Andy, you can buy a property in Queensland in a company, a trust structure. It won't be bundled. Andy, it might be appropriate, folks. This is not financial advice. Blah, 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 blah. It might be appropriate that you buy or you want to buy a property in a super fund, like an SMSF.
or just not listen to anything that we've just said, because
listen to
none of
it.
what we've said has any relevance whatsoever to your personal circumstances.
Yeah. Which is good. I mean, Chris and Kat here said, what if you own a property in your SMSF? Thankfully, Chris, they're not cross ownership bundle. So if Andy and I were partners, very new age, they're not taking Jason's properties and Andy's properties and saying, hey, you own them as a group. They're saying separate names, separate SMSF, separate companies, separate trust, separate owners. I mean, that they haven't crossed that line yet. But there you go. Bob's saying not yet, folks. But so I think
I've got an idea of where the next level of inflation is going to be, and it's government fixed price inflation. It's going to be in legal costs and financial advice.
Yeah.
It was Kerry Packer who said it in the House of Reps inquiry in 1991, in the Senate inquiry into print media. He said, "I've got a suggestion for you." Because this is quite legitimately, and from working offshore, I can validate it, is that the damage that the government does by changing laws and just writing legislation anytime the wind blows is nonsense. And basically what it does for investment and what it does for investment in Australia is investors in Australia go, well, we will not have operations in Australia, but we will rape and pillage and plunge your resources and your businesses out here, because we can't operate in Australia because you just cannot operate in an environment like this. It's just not possible.
It can't be uncertain. Yeah. And Donna's saying, hey, it's dumb. It's stupid. This conversation that this Queensland government has started in land tax is, I think, ludicrous.
But it will be really interesting to see whether it actually, because here's the thing, is that the Tax Act is actually legislated, right? Now you can bring in legislation over on top of it. You can amend the legislation the way that it sits, but I reckon there'll be precedent set on this, Jason, because there'll be enough people who will lose enough based on these ridiculous changes who are going to get a little bit pissed off and say, well, hang on, let's have a crack. And I think it'll be interesting times ahead, especially for corporations as well.
Well, I mean, you think about this, Andy, and Alison, I reckon I disagree with you on this one, because in the past, the exit tax in New South Wales failed miserably. Right now, the state governments get stamp duty and GST. GST on construction, on new construction in your state, Andy, is it's gold right now, because the states have doubled down. They were meant to get rid of stamp duty because they now brought in GST on real estate. All right. So, but they've kept it, they've broken their promises, et cetera, right? And so what I think is going to happen, Andy, is the investors will just move to a new market. Adelaide, Canberra, Perth, Newcastle, Hunter Valley,
these their places, own moonshine.
And make their own moonshine. Alison, we're making our own moonshine, mate.
That's the reality. The system will find a way. And mate, there was I've forgotten who brought it towards. I've forgotten, you might know, but there was actually a proposal to reduce capital gains tax on property sales. And
Mm,
it was based off some interesting studies that in other Western countries, when they reduced the capital gains tax, because if you own a property that's gone from $1 million to $2 million and you're at 65 years of age and you're retiring, you go to sell that property, you have got a $500,000 assessable interest, so accessible taxable income.
tax.
So
Yep.
let's just ballpark it. You've got $380,000 to $400,000 worth of tax to pay, right? So do you think that that house is going to get sold? No, they will die with that house, and that house will then get passed on. And because of the way that the law is set up now, it is a tax event, but you don't pay tax. It'll go to the next owner. Do you think the next owner is going to sell that house? Not for love nor money. They will hold on to that as much as
Yep.
they can. They will leverage it up to their eyeballs, and they will use that money in great ways. And the UK created death taxes to manage this. But a forward-thinking way of managing this was, and I've forgotten who it was. Maybe it was Switzerland. I can't remember. There's some papers written on this. Reduced capital gains tax, and all of a sudden, what happened is all of a sudden the market started turning over at a great rate of knots.
Mate.
There was twice the amount of transactions, which meant that they had more money flowing into the government and less amount of tax per person because assets were changing. And the
Mate,
rule of thumb,
you and I know the universal law on this one. It has to keep moving. Money,
money
when
moves.
it stops, goes rotten, right? Like when water stops, it becomes stagnant, becomes toxic. Wealth, when it stops, when it gets blocked, becomes stagnant, And, you know, it's almost like, Andy, like the world of leverage, right? Lending, leverage became a tool to unblock that money because taxes became onerous, right? So you got this like, well, stop if you want if you want bad lending practices to be eliminated, stop putting so much fucking tax on the system. It's like, what? You know, mate.
Well, mate, that's how futures markets were
Yeah.
created. That's how Greenspan then took the commodities futures market, brought it into financial terms. That's how Bitcoin is farmed and then released and then redistributed. There's some bloody interesting shit that's going on in that world. Like, holy Moses, there's going to be people going to jail. But ultimately, yeah, 100%. Leverage created the freedom of this money to be able to transfer because the transactional costs became so prohibitive.
Yeah. Ludicrous.
Of allowing that to transfer that it froze markets. And it has done for generations. And ultimately what we will see, blockchain, 20 years from now, the way that blockchain is going to impact transactions, world tax, is going to be revolutionary because what that'll do is it'll allow you to sell little bits of it over time, realize less of the tax over time, be able to there's a whole world coming. And hopefully the politicians won't have a rat's ass of what's going on. They won't have a clue what's happening in the background. It'll all just take them by surprise. But the reality is, mate, this is one of the most ludicrous things I've seen in tax and just political decisions. And my belief, which is founded nothing more on my opinion, and opinions like our arseholes, everyone's got one. And if it's in the media, it's designed to scare you into doing stupid stuff. But mine is that this is based off premiers post-COVID believing that they are Bruce Almighty.
Yeah.
And it's scary. And we've spoken a lot. We've talked a lot about political ambivalence. And mate, this one I reckon is one where write to your member. There's a reason why they're called a member, because they are a giant.
Well, that might be. Yeah. Well, and I'm with you. Yeah, because I've already actually written to my my legal team to say, hey, how actual, like, is this actually from a privacy point of view, like legal? They've got no they've got no rights or interest to actually ask about my personal ownership interstate. Like, why? So where does this sit? I want to know what the guts of it is. So I've asked it, and I reckon we could mobilise. Andy, maybe this could be our flag we fly. Our reluctant step into political mobilisation.
Right, we'll need to create our own states. We might just draw a boundary around a certain region and create our own currency.
The
That's
peninsula. I think the Mornington Peninsula, mate. We can do it. You can
not a
do
bad
it.
place to do it. Not a bad place to do it. But mate,
Well,
ludicrous and wow, interesting times. Interesting times. Like
yeah.
how you make decisions like that, how you pass them, how you get people to agree to them, how you justify them, how they exist long term. I don't have an answer for any of those questions right now. I
Yeah.
was flabbergasted when it came through, and I thought that this is going to be a really interesting 12 months to 24 months. And where it's really going to be interesting is where somebody gets divorced, somebody gets killed, somebody dies as a result of these because this is the reality of these sorts of things, is they can create pressures in certain areas that then become insurmountable or seemingly insurmountable.
The administration of it's like ludicrous. Yeah.
But the flow-on effects, and eventually somebody's going to point the gun back at the government and find out, is this legal? Is this, how do you do this? Does it intersect with the relevant laws in such a way that makes it fully legal, like fully sick? I just don't get it, Jace. Like I'm so gobsmacked by it. It just doesn't make sense to me.
Well, we've got a year and a half, folks. Well, is it a year? Maybe a year, not a year and a half. A year. It is or just under a year. And let's see how we roll. I'm certainly going to make a bit of a stink about it, Andy, and I think we might sort of rally the troops on this one. There's a few people who might be interested in doing it. So, mate, I think we might need to put a pin in it there.
Here's my tip, mate. I reckon you're going to see the same thing bloody pop up in Victoria and then New South Wales. I reckon, because basically what happened in the pandemic was one shut the borders, then the other one shut the borders on them, and then the other one shut the borders on them, then the other one shut the borders on all of them, and then WA shut the borders on everyone. So then my question is going to be, well, if all the premiers actually get into their own respective corners, my belief would be, well, hang on. Sorry, Jace, you're a Queenslander. You can't take that tax. I want the bloody tax because that land is in my state.
Yeah.
And that's going to be that's going to be the interesting part as to where they end up squabbling within themselves, because there is a thing called the double taxation agreement. And I don't know how this sits on a state-based level, but we've got it's not in the Constitution. We have what's called a double taxation agreement with many countries around the world. Not everyone, but many, which basically means that it is illegal to have a double tax. And what I mean by that is, if Jason is US and I'm Australia, and I've got investments over in the US, and Jason says, well, based on it being over here, I've got to get my fair whack of tax. So Jason taxes it at 30%, right? And then it comes back to Australia. I can't then go, well, on top of his 30%, I'm going to charge it at the marginal tax rate, right? It's called a double taxation treaty. And basically what it means is that there's a fair exchange between these countries. That means that you can't be taxed twice. So either, we need to take a concession in Australia, or we've got an agreement with the US, but ultimately you can't get taxed multiple times at the full whack. It's a really, I've articulated that poorly, but hopefully there's a broad understanding of what I'm trying to get at here. Now we're talking about state-based, and I'm starting to think, well, how does that actually apply? Do we have a double taxation agreement with the rest of the states? Because this to me now starts to come into a really unusual area of tax, which to be fair, I've never even thought about and I don't understand well enough. But it starts to beg some questions. If we can get along with our global partners in a way that we have a double taxation treaty with our global partners, but we can't within the states of Australia, what does that say about how united we are as a country?
Well, mate, I think there's plenty to play out in this little space, and certainly we've got not a lot of time to understand what it's going to mean. My call, I reckon, if it becomes successful, then the other states will follow. But I don't think it will be successful. As in, I don't think it'll be a long-term windfall for the government. I think what will happen, short and medium term, is investors will go, piss off, Queensland. We're just going to take our money somewhere else. I think that's
Mate, Exmouth is amazing.
Don't listen to Andy Fender. Well, it's a nice place to go diving, folks, but don't buy any property there.
It's amazing. It is just such a beautiful place in the world.
Well, it's not that it's actually not that funny, actually. Well, it's actually serious. Western Australia is the only state in Australia that has got a surplus in their budget. Like, I think they're undervalued at the moment, folks. That's just personally.
But
Andy,
Broome was meant to be the gateway to Australia. Once upon, do you know this story?
No, I don't know. I do not. My last drop of wine, Andy. You've got 1 minute to finish the story, and we'll let everyone go.
But Broome was meant to, and I've got to remember the facts, and I don't right about now. So it's an anecdote to be finished in the future, and I'll bring all the facts back. But Broome was meant to be the gateway to Australia for international visitors through the top ends. That's why so much infrastructure actually went into the top end of Australia, Darwin, Broome, because that was perceived to be an incredible way of bringing everyone into Australia. It ended up them being Sydney and Melbourne.
Terrible idea. They should have put it up the top there. It's where the water is.
And so my question is, maybe they got it right. It just took longer than they thought. And we'll see how it goes, because Coral Bay is a beautiful place. Exmouth, Point Sampson, northern WA, mate. It's an incredible neck of the woods.
Well, mate, let's give it another 200, 400 years in Australia. Let's see how we go.
Maybe they were just a little bit too soon, but they saw well and truly into the future.
Well, folks, fantastic to hang out with you guys tonight. Really, there was a few questions we haven't answered, but as always, I think
we'll
that's a bit
of them next week.
Yep, we'll circle around. Yep. Really appreciate you guys hanging out with us tonight, and plenty to discuss, Andy. Lots going on.
Mate, we were starting off and we thought that maybe we were a little bit light on, but there's so much going on out there. It's crazy.
Mate, I didn't even get to anything that I had on my slide deck. But folks, mark my words, we'll circle around to this next week. There's plenty on the horizon right now that we all need to be aware of and keeping an eye on as property investors, as business owners, as share investors, marketplace observers. We need to really be across it. So you guys have an awesome weekend.
Understand Andy? Who to trust,
yes.
Who not to listen to, and that'll make your life a safer place, a more enjoyable space, and more smiles on the weekend is what we wish for all of you, and appreciate each and every one of you.
I love this one. Jared said he had 2 beers and half a wine. It was thirsty listening. All right, that's
That's gold.
That's gold. That's awesome, Jared. Well, thanks all of you guys for joining us tonight. And I think that's it from us. So it's a good night from him,
and it's a good night from me.
Good night.
Good night, everyone. Have a good weekend.
Have a great weekend, folks.